Welcome back to Alberta Primetime. And the vocal point now, China's state-owned oil company, CNOOC, is trying to buy Calgary-based oil sands firm Nexen for $15 billion. Is it an issue of national security or just good economics? We'll ask our Monday Money panel. Jane Alm is an investment advisor with Angus Watt Advisory and National Bank Financial. Calgary, Shafik Hirani is a director with Investors Group in that city. And Claudia Catano is Western Business columnist at the Financial Post. Good evening, everyone.
Good evening.
Good evening, Jennifer.
Hello. Claudia, there are concerns, including those outlined by former MP and Secretary of State David Kilgour at the start of our program tonight, that what would be Asia's biggest foreign takeover is a matter of national security when it comes to Canada and our resource wealth. Is any of that concern valid?
I think some of the concerns are valid, but it's almost too little too late. These takeovers have been going on for a number of years now. Asian companies have been making bigger and bolder deals, some of them including control. And this is just another big deal. It just happens to be a deal involving one of the so-called Canadian champions. So yes, the Canadian oil patch is increasingly owned by foreigners. But it's just a continuation of a trend that's been going on for a while, and frankly, there hasn't been much opposition to this takeover binge until just recently. So it's kind of difficult for the government to stand back and say, well, you know, we're not going to allow this one when all the other ones have been approved.
It is a big chunk of change all at once. Jane, what does it mean to you that China is willing to pay $15 billion for this stake?
Well, part of it is when I look at it from China's perspective, they have a lot of money tied up in U.S. treasuries and other U.S. bonds, government bonds from around the world. And they want to, as any good investor, they want to diversify their portfolio. So they're looking at it and going, we want to buy commodities, but we don't want to buy necessarily just shares of commodities. We want to own the companies. So they're looking at it as a way to diversify their portfolio. That, from their perspective, is a good thing. From Alberta's perspective, if they come in and operate the plant efficiently, treat their employees under the Canadian and Alberta labor laws, and follow all our accounting principles, pay the royalties to the provincial government, then, you know, yes, as Claudia pointed out, these have been going on a long time. It's a lot of money, but is it really different from some of the ones in the past?
Shafik, I want to bring you in just a moment, but you raised the point of labor, and that was something that David Kilgour said. He accused them of not treating their employees properly, including within our jurisdictions. Claudia, is that concern where labor is involved an issue? Is there evidence that Chinese-owned companies don't treat employees properly?
Well, I think that in some of the early deals, we saw some instances where basically where they just weren't aware of the standards here. So we had some incidents that were regrettable. But I think the more the Chinese get used to the Canadian oil patch, the more they embrace our values. And I had a chance to sit down with the CEO of CNOOC today, and it seems to me that in this deal they're willing to go over and above Canadian standards and Canadian expectations. I mean, they want to hire all of Nexen's employees and even more because they have full confidence in the way that they're running the operation.
Shafik, what's the other idea here behind this deal? Jane mentioned diversifying China's portfolio. There seems to be a bit of a fear, though, well, you know, they'll control this commodity that everybody wants and needs, and should something happen, well, they'll be able to pipeline it directly to Asia. Maybe that's what we've wanted, though.
I think that's sort of the main you know, debate. The Canadians generally aren't going to like it, but the Canadian companies have been inviting the Chinese for years with joint venture opportunities. And the Chinese, this is a state-owned company, and there's a $450 million breakup if it doesn't go through. And the Nexen shareholders, they're loving it because Nexen was worth $10 billion on Friday. Today it's worth $15 billion. We're looking at a 60% premium in the stock price. So it's a very good opportunity. The Chinese are paying through the nose for this.
Yeah.
Sorry, Claudia, go ahead.
Yeah, I just wanted to point out that these Chinese companies, we keep talking about them as state-controlled or state-owned, but they are market players, and they don't really care whether the resource is shipped to Asia or whether it's sold to the Americans or anybody else. I mean, they're here. They want to play by our rules, by the market's rules. And they will sell resources to the highest bidder, which is what Canadian companies do.
And so what does this open the door to for the rest of our biggest sector in Alberta, the oil sands?
Well, as Claudia pointed out, we've seen this for years. It started with Husky, I think, was one of the first ones, where the Hong Kong billionaire came in and bought Husky.
Does this light a fire, another fire?
I don't think so. I think it's just more on a continuing basis. You know, Shafik's already pointed out, our companies are inviting foreigners, whether it be Chinese or anybody else, in as joint ventures, because we need capital to build up those oil sands. We want to build pipelines. We need capital. We need environmental controls.
It's not worth much sitting in the ground untouched.
Exactly. If we want to be able to export it, we need to be able to get it out of the ground.
Shafik, you're watching some other items in Canada and the U.S. this week. What are they, and why are you keeping an eye on them?
Well, you got to see that the U.S. has got housing numbers out, the residential housing. They came out with a flat report in housing last week. Also, if the housing numbers released on Wednesday are flat, you might see a little bit of a decline. Also, the Canadian government's got the budget and release. So Mr. Flaherty, the finance minister, is going to be talking about what's going on with the Canadian fiscal status, and that's a good indication about which way the Canadian economy is going to trend towards.
Claudia, you've been looking at second quarter earnings. How are Alberta companies in particular faring? If they're decent results, are they having any impact on the stock market, or just not able to, with Europe still shaking things up?
Yeah, the results season has just started, and the expectations are that it's probably going to be a repeat of the first quarter, where results are going to be pretty good. I mean, oil prices have softened a little bit. Gas prices are still bad. But on the other hand, a lot of these companies are very profitable. They have very low debt. And they're doing fairly well. It's not translating into stock prices, which is actually another reason why these companies are so vulnerable to being taken over by foreign entities. Talk
about the thing that is impacting stock markets negatively, and as always, Europe. More news today.
Europe. I mean, we had first Spain. Another few regions are saying that they're going to need help, so more potential bailouts there. But the big one this afternoon after the close, Moody's downgraded the outlook for Germany. Germany's GDP came in weaker than expected last week. Remember, Germany is effectively the bankroll for a lot of the things that they're trying to do in Europe. So that will put a lot of pressure on bond yields again to go higher. That's not a good feeling for anybody in the bond market if you're long European bonds. I would say if you're long European bonds, you probably shouldn't be at this point.
Well, and anybody in the markets these days, your clients must be so nervous, probably have your phones ringing off the hook, both you and Shafik. I want to also talk about some other numbers today. The newest inflation rate up slightly. June's figure is 1.5%, up a little from 1.2% in May. But two specific categories are up a little more sharply. Electricity up 5.9%, and inflation on food 2%. Shafik, is inflation a concern, at least maybe in those two categories?
You know, they look at inflation in two different types of inflation. They look at overall inflation measured by the CPI. Is that a concern? No chance. The Bank of Canada, they have a target rate of inflation. It's 2%. Inflation since May has been 1.5%. So it's under control. And in order to control inflation, they will increase rates, and that'll be contractionary towards the economy. Core inflation includes utility, some food, some electricity. Food and electricity are going up at a significantly higher rate. That's about a 5 to almost 6% annual rate. That's worrisome, and the reason that is because in the United States there's been a drought. and that's causing food prices to go up, and you can pretty well expect that to continue for the next year.
Okay. Just quickly as well, another topic, Canadian retailers pressuring the federal finance minister to take action on fees that merchants pay every time you use a credit card at their cash register. U.S. retailers have won the right to charge customers or refuse credit cards, the high-fee credit cards that merchants are taking a hit on, following an out-of-court settlement with some major credit card companies on that side of the border. Jane, credit card companies make $5 billion on the fees that merchants pay each time we use a card. Should the finance minister in Canada act? Do you expect him to?
Well, I guess the challenge becomes if you're a retailer and you want the finance minister to act. I mean, you and I are already paying a fee, part of that fee, every time we use our credit or our debit card.
Priced into the cost of goods?
Exactly. I'm not sure that retailers are going to reduce the overall cost by that fee and then charge it on top. So I look at it from the side of the consumer and going, well, wait a minute, if you want me to pay to use this other credit card, then are you going to take away the base fee?
Thanks to all of you for your time and thoughts tonight.
Thank you.
Thanks.
Jane Alm is an investment advisor with Angus Watt Advisory and National Bank Financial. In Calgary, Shafik Hirani, a senior director with Investors Group Calgary, and Claudia Catano, Western business columnist at the Financial Post.